Treasuries, there isn't very much to speak of. The government today announced new incentives for lenders to modify mortgages facing foreclosure. It will modify its Home Affordable program to provide additional payments to lenders that take into account recent declines in home prices. Treasury Secretary Tim Geithner and HUD Secretary Sean Donovan made the announcement following a meeting with the president and mortgage counselors of the National Community Reinvestment Coalition. Its president, John Taylor, actually joins us now. John, thanks for coming in so quickly after your meeting. You just got out of it.
Sure,
why don't you tell us how the meeting went? What were your initial impressions?
Well, my initial impression is just to see two cabinet-level secretaries totally absorbed in trying to figure out what to do about this mortgage foreclosure crisis, and then having the level of detail that they had. It bodes well, I think, going forward. And then some of the numbers that they released today of what's happening already under the program were also encouraging.
Talk to us about the numbers. I mean, what is the administration doing to help homeowners modify mortgages, to avoid foreclosures, to make homes more affordable, et cetera?
Right. So they've built this partnership with the lending industry, with services, with counseling agencies and the government to incentivize the investors and the services and the banks to modify these loans, to reduce the principal and the interest rates, so that basically you begin to match up people's ability to pay with the kind of mortgage they should have gotten in the first place. There's been a number of initiatives that were voluntary, that didn't have sweeteners, that none of them worked. What their program, President Obama's program, it's called Making Home Affordable, seems to be working. Already, in a very short period of time, 50,000 modifications, several hundred thousand already in the pipeline. Today's announcement was to actually help those who just cannot be helped through modification, but can avoid foreclosure through a short sale or a deed in lieu of, turn the keys over and the deed over in lieu of paying the mortgage, to have some standardization and some financial incentives to the lenders and services to work on that, so that there's more reasonable, fairer exit for a lot of these homeowners. But the point is, more than anything, what they're doing, I think, is they're going to help stabilize housing prices in this country as you reduce foreclosures and create a standardized system for moving these houses, people out and other people in, or keeping people who are still able to pay in their homes. So,
are you satisfied then that Washington is doing enough here? I mean, is that what you're saying?
No, but I'm encouraged for the first time, and I've been involved with Secretary Paulson and all of President Bush's people. This is the first time I've been encouraged that there's something that actually is on the table that could work. It's really up to the industry. It's up to investors. It's up to services to collaborate with the government. There's certainly sweeteners, financial sweeteners in there that incentivize them to do it. Everybody, a lot of people are waiting for somebody else to modify loans, some other bank or some other servicer, and to see if the market turns around quickly, and then they can not have to give anything up. But I think we all have to sort of give something up here to try to create rational mortgages that keep as many of these foreclosures from occurring as possible. Because foreclosures is what's driving down this economy and driving down housing prices.
Exactly, and the pace of foreclosures is a concern. When do you see the pace of foreclosures coming back to normal rates? I mean, are you projecting that for next year, for 2011?
Yeah, I think through the rest of this year we're still going to see higher rates, but the key is being able to recognize when we're turning the corner. There has been some encouraging news in spite of the recent numbers out from Realty Track. There is some encouraging news that the actual foreclosure, the foreclosures that go through the entire process where there's actually a foreclosure, those numbers have leveled off, and while filings are up, there's an indication that we're finding ways to prevent these foreclosures from going forward. If we can turn the corner on this and begin to have this Making Home Affordable program work and collaborate with a lot of lenders and services, I think we'll make a huge difference.
All right. Hey, John, thanks for joining us. John Taylor there,
Sure.
President and CEO of the National Community Reinvestment Coalitions. We take a quick break here on Bloomberg. Come back and talk about jobless numbers.